and welcome to Book 101 Review. Book 101 is all about the books that I read for the last 40 years. And today I have my special guest. He's the author of the book, The 100-Year Market Pattern Wall Street Never Told You About. No other than Mr. Afshin Moshrefi.
Well,
Welcome, Mr. Afshin. And can you please introduce more about yourself that I missed?
sure. My name is Afshin Moshrefi, and I have become a data scientist who has focused his time on retrieving patterns out of vast amount of market data. And the 100-year pattern is the actually result of the research that I've done. And there are some astonishing discoveries, but the biggest one is really the title of the book.
Mr. Afshin Moshrafi, thank you so much for sharing your knowledge and wisdom to the world. Hoping for more and more empowering books like this to come. So tell us, what is the heart? What is the fundamental economic, demographic, or psychological driver that creates these consistent 100-year pattern, and why it is seemingly immune to a modern technology and globalization?
Well, the modern technology is well aware of this. And based on the research that I've done, even the large trading firm, the large companies that trade billions of dollars of stocks know about it. However, this information is not available to people. But those large firms also have these armies of PhD and mathematicians, and they get vast amount of information that they use. But then I can show also that they know this information, they just don't talk about it or document it. It's not to their advantage for the rest of the public to know. However, this information is deep inside of the data, and what I've done is actually extract it.
Extract it and give it to the people they need, who need it, I should say. That's
Well,
the
I needed
pattern.
it myself first. I really
Hmm.
built this for myself initially. And as the circumstance take it, it just turned out to be better than I expected. And since at the time I had just left a job, I decided to make it public.
And thank you for making it public, Mr. Ashfrin. Does this pattern hold true across all major asset classes, or is it specific to equity markets?
No, it's across all asset classes. However, the magnitude is different. The most astonishing thing that I found, which I ended up calling the book, is a pattern that I discovered in the S&P 500 uh, for the last 100 years was something that I did vast amount of research on. And what I found out is that S&P 500 price patterns are dramatically influenced by the presidential election cycle. So each year of a presidential election, which I call it PE plus one, plus two, and PE plus three, and then it repeats, all of them have completely different signatures. And it's so astonishingly clear when you look at the information that way that you are able to come up with very exact historical probabilities of what's going to happen next.
What happened next? I like that.
Yeah,
And go ahead, Mr.
and
Afrin.
and one of the most interesting things was that when I brought this book out, right before the book, one of the most interesting patterns had started on April 7th. So I even have a video on April 6th that I put out on YouTube saying, in the middle of when everybody was thinking about financial Armageddon due to tariffs, I said the market is going to be extremely bullish. And the video is on my YouTube channel right now on April 6th. And the time frame that I gave, S&P 500 went up 25%. And history repeated itself exactly as it has last 50 to 70 years. It was consistently bullish on the PE plus 1 years, the year after a presidential election. It just keeps happening.
How is the pattern phase defined and measured? Is it based on price to earning ratios, total return market capitalization to GDP, or more complex,
That
Mr.?
is an excellent question. It's actually the simplest thing you can think about. The patterns that I look for are based on date ranges. For example, I find patterns that may start on, in this case, April 7th until August 2nd. And what I measure is what is the relative gain or loss of the asset or the index. In this case, I looked at the index of S&P 500 and I found out in this situation when it's PE plus 1 years, April 7th to August 2nd has been extremely bullish for the last 50 years. Every single year. It, on PE plus one, it's been bullish. So that raises the probability of it repeating. And it did. It did exactly that. But even that is not the most interesting pattern I've found. The name of the 100-year pattern is after a date range that I discovered that happens next year, which is the PE plus 2 years or midterm election years. By the way, the first half of it usually is extremely volatile to down, and I expect this to happen again next year. However, on September 27th, this amazing pattern that has never been documented before this book starts. It starts on September 27th of midterm election years. It lasts for 295 days until July 18th of the following year, and it repeats every 4 years. What is so amazing about this is that in the last 100 years, this date range I just mentioned has been S&P 500 has gone up an average of 20% every single year since 1930. Nearly 100 years. It's never gone down. And through math, I discovered that almost 70% of the entire S&P 500 cumulative gain over the last 100 years has happened during this period, which is only 20% of the time.
20%. Imagine. So
Yeah.
tell us, is this pattern specific to the US market, or it can be observed in the centuries or the countries long data after the major economies like the UK or Japan?
Well, that's another excellent question. The the way US market works and the way I look at it is that There's a lot of foreign markets that are directly related to American market, and that includes most of Western Europe, Japan, South Korea, and even China. So what what happens is that since US controls 27, well, let me step back a little bit. United States creates 27% of the GDP of the entire world, and United States only has 4% of the population, which means the relative economic power of the United States is much higher than the rest of the world. In this context, then it also pulls the markets of the entire Western world with it. So during this period of time, which I call the 100-year pattern, which happens next year, this is going to also bring the entire Western market with it. It's going to be bullish.
Interesting. Mr. Ashwin, what is the primary financial incentive for Wall Street to ignore or obscure the pattern with such a long-term predictive window?
Oh, they're not ignoring it. They're using it themselves, but they have no reason to publicize this information. Nobody's compiled it the way I did. Basically, this is pure data science and math. And the way I show it in the book is that it I show that it's all about probabilities. Of course, it might not happen. However, the probability of it not happening is low since it's been happening over and over for 100 years.
100 years. So how does the or if the pattern is real and reliable, does it render a vast majority of active fund manager obsolete, suggesting the timing based on a century scale cycle is far more important than stock piking?
Well, not everybody is going to come and learn how to use these patterns. There's still some work to be done for someone to use this. So this actually is a major edge for anybody who focuses on trading. So some people like my wife or a lot of friends that I have are just not interested in investing. They like to have a financial advisor, but this type of information would really give superpowers to the financial advisors themselves, including just retail traders and professionals or finance students.
And how did the pattern hold up during the most extreme exogenous shock of the last century, such as the 1918 pandemic, or the World War II, or the invention of the internet? Did these events create more blips or significant deviations?
Oh, they did, but not for the period of time I just mentioned. It never has. The lowest performing time during this 100-year pattern that I mentioned was 1978 during the oil crisis. During 1978, it was flat. It didn't go down, but it closed at the same price. That was the lowest performance in the last 100 years. And another thing, by the way, this is not a theory. This is based on hard data, and in the book, I show the hard data. So there's no guesswork in here. It's just data.
Is just data. Indeed. So, what are the key criteria that distinguish the true start or end of a 100 year cycle from a shorter term, say 20 to 20 year secular bull or bear market with the larger cycle?
what's happened in the last 100 years, there are always a certain sector of the industry that's leading the rest. At some points, it was energy, and other times it was computer hardware, then it was computer software. And as everybody knows, today is just pure AI that drives the entire market. They change, but the shape of the pattern hasn't changed. And if the shape of the pattern changes, which then it would show an outlier, we can also detect that and say market has changed characteristics because it's not like the past, but it has been. It was a very interesting question someone asked me during another interview was about, is Trump just another president or has he changed the economy? And when I thought he had changed the economy substantially, and then when I did the research, the patterns are holding like before. Nothing's changed in the economy itself in the view of seasonal patterns. I don't see the difference. Yet my gut feeling says he has changed everything, but not the data doesn't show that yet.
Not yet.
No.
So, Mr. Ashwin, what are your short term and long term goals as an author?
Well, my short term goal is to try to get this information to as many people as could use it and need it. Um, I have gotten some big names that have discovered the book and the software, and they have become the real believers. And I just talked to there's a um, very famous um, world known trader called Anne Marie Bind. She was telling me that every day when she wakes up, she looks at TradeWave first before she makes a plan of what to trade. And I like to bring this to as many people as they can use it.
Good luck to your goals then, Mr. Afshin, and looking forward for more success. And what will be your piece of advice for those people out there who want to be like you?
Oh, don't, I don't want anybody to be like me, but I want people to succeed. That one of the greatest feelings is when somebody sends me an email or during a webinar, they tell me about their success stories. But this is the big thing. I started trading and investing a long time ago, and I was not very successful. Although I've had huge successes, like I made a $400,000 once in a month, and I wrote it in the book. Uh, but that was luck. What I realized is that I don't know the odds of when I invest or trade. I don't know what the odds are, and that makes me uncomfortable for a mathematician. That that is not something that we like. So what I do now is basically trade when I know my odds. I know what the odds of winning are. I don't always win, but when I lose, I know what the odds are. So in the long run, you can create a consistent portfolio and you can build wealth over time consistently. And I actually have a chapter about that in the book about, oh, what's my style of building wealth.
Thank you for that advice, Mr. Ashin. Because if before we wrap up our discussion for today, I'm inviting you to please do listen to my other podcast, people. my other podcast because my Abstract Essay is already in fifth season, Abstract Poetry in second season, and my book 101 review in fifth season too, Comedy 101 in second season, and my Food 101 in fifth season as well, Geography 101 in fourth season, and my baby podcast Law 101 and Mental Health 101. Love Letters in third season, and Movie 101 Review and Music 101 in fourth season, and Science 101 and Sex 101 in its first season. Please listen to them wherever you listen your podcast. So, Mr. Afshin, if you could give one piece of advice to the average investor based on this hidden pattern, what would it be?
Just just try to learn how to trade with odds, and it is just one of the most comforting feeling as an investor and trader. I have gone through trades that I lost sleep many days when I was first starting, and I know that happens with other people. But when you have a plan and you have your odds on in your favor, it's like going to a casino, playing blackjack and counting cards. They are not gamblers. They are just opportunists that know their odds.
Opportunist. Yes, for sure. And Mr. Afshin Moshrefi, thank you so much for sharing the 100-year pattern to the world. Hoping for more and more empowering books like this to come. So, can you please invite our listeners to support your book, your advocacy, your business, or whatever projects that you're doing right now?
Sure. Um, by the way, another book is coming out probably next summer. But this book itself will have every year coming out a new version with new opportunities listed in the book.
Yes, we are looking forward for that book, Mr. Afshin. So, where do people can reach you?
You can reach my email, afshinatradewave.ai, or you can just go to my website, which is tradewave.ai. And I'd love to hear from anyone with interest.
Yes, people, let's support Mr. Afshin much very because if you support him, for sure, more and more empowering business to come, more and more empowering books like this to come. So, Mr. Afshin, thank you so much for your time.
Thank you, Daniel.
More to come, people. See you soon.